Hey guys, this is Market Update. In this video, we're going to look at how Bitcoin and the markets generally are wobbling a little bit right now, but why that's not probably the thing to focus on, and it's not the real story. And I want to go through what the real story is in this video, including how Bitcoin is reacting past the halving, which is typically fairly weak price action wise for BTC. You can see that here. 50 days or so after the halving, not much happens. And so we're actually getting that again for BTC. So coming to the price, 64,000 right now, more or less. We're just kind of printing monthly candles at the all-time high. And so up here, what we, I think, need is just Bitcoin to change hands from short-term traders who clearly, made some very good profits over the last 6 months in that ETF trade. But they have to be washed out. Bitcoin has to get some support levels around these prices where, long-term holders come back in. Actually, Onchain data is showing that a little bit right now, which I'll get to later. So, printing monthly candles around the all-time high, it's hard to be bearish at this point. If you do trade, check out Bybit. You can get a deposit bonus up to 30K. Check the link down in the description for the details. Bitcoin's MVRV actually found resistance at a very typical level as well. So if you are looking to trade cycles, what you're really looking to do, maybe over a 4-year cycle, is to allocate more towards the bottom of a cycle. If we're assuming Bitcoin's just going to continue to grow, which I think at this point we have to assume, especially as it's being brought on institutionally as well. So that will carry on, right? Now that you have the ETFs, okay, we can actually, pretty much say with a high degree of certainty that the next decade we'll see more users coming into BTC. Now, the rate at which that happens, we can argue about, but there'll be more users in a decade than there are now. Therefore, secular growth continues. So if you're looking to trade cycles, you just want to allocate more when prices are relatively weak. And so that's when MVRV is down at the bottom at kind of 0 or in this green box. When prices are relatively overbought and very, very high, where the red box is, obviously, if you're trading cycles, sell. Or if you're looking to be more active, maybe buy less or don't buy there. Or if you're a long-term investor, doesn't matter. But you can see we've come way out of this zone and we're kind of in the mid-level at this point, right? So mid-cycle, halving just happened. Mid-cycle, mid-level in terms of prices. Very typical. It's amazing how typical it is. Then we can look at this one, which is net realized profit and loss. So essentially, assuming that we want to buy Bitcoin, we want to take value in dollars or our fiat currency, which is in a mess. We want to take it into an asset. So we're looking to accumulate. Well, where do you want to accumulate? The first thing is just accumulate all the time because you're a long-term investor. If you want to be more active, then definitely accumulate when MVRV is low or when these other metrics just show that the market is in one of those kind of drawback phases. So as you can see here, Bitcoin is a growth asset and it grows most of the time. In green here, the net realized profits are essentially virtually all the time, more than half the time, the network is just in profits. That shows you the network is exploding higher, right? More users coming in, value up. But if you're looking to accumulate this thing, which I guess people would be, you're watching this video looking to accumulate this asset because it's the best performing asset over the last decade, 15 years, then you're looking to accumulate. Well, the best time to accumulate is when other investors are pulling back, when the market is pulling back. Prices are lower, prices are soft, but you've got this asset with massive growth, secular growth, as people trying to escape fiat currencies. So you can see we're just pulling back into that now. But if we zoom out, any of these levels where it's not green, right? These are massive areas to try and accumulate, even with the volatility. It is the best performing asset. So trying to accumulate at lower prices is really the name of the game. I'm not a Bitcoin evangelist. I just see it as the asset that is best placed to protect myself from what I need protection from, which is we know governments and central banks in every country increase the amount of currency units to force asset prices higher. So that's brilliant. I'll just go and buy the assets that go up when they do that, no problem. The problem with the house, though, is that it's a big ticket item. It's huge. It's a life's savings technology, huge investment. The problem with the house also is that it's actually not an asset. A house is a physical depreciating good with an unlimited supply. It's an awful investment. It's not an asset. The only reason it kind of works is two things. First, we can create massive leverage on the house, which is a mortgage. And as long as the mortgage we're paying the interest on that, as long as that's below the rate of currency debasement, then we're actually playing the currency debasement debt creation game. But the house itself can't go up in value because it's a depreciating physical good. It costs a lot to actually maintain. The other thing that helps it stay up in price is that the government, we actually create legislation and regulations to try and keep the price from falling down. For example, you can't build there, right? Try and build new property in the middle of a big city. Can't do it. Regulation's too tough. If they wanted to, they could relax regulations, create a huge glut of housing supply, and drop the price of housing. That would be great if you're looking to buy a house and you're young. But if you have all of your pensions and your systems, right, that rely on price levels at a certain price, you can't drop the price of housing. Therefore, you have to artificially create a lack of housing supply. Because everyone's debt and mortgages and wealth and pensions are based on these assets at a certain price. But the problem is, housing isn't an asset. It's a depreciating physical good that we have to keep up. And so we do that through currency debasement. So that's the game we're in. Housing, as you can see, this is the VNQ, which is it's a REIT in the US. It's not exactly our housing, but it's a real estate investment trust, so it has lots of different types of property. This is the VNQ, so real estate, not valued in dollars, but valued in USM2, which is the money supply. And as we know, money supply increases, banks can increase it, central banks can increase it. Why? Central banks increase it to try and keep the price level of things higher. So as you can see here, property is not a good investment. It does not outperform the growth of M2. It's a terrible investment. It makes no money. But we have to live in it. And we, the government and us, have to keep that price optically high because of our debt is created upon it. So you can't make any money with housing unless you're like a housing flipper expert, but that's a job and not actually investment in housing. So housing doesn't outperform M2 growth. It's a bad investment. Then we have a look at the S&P 500. S&P 500 is actually money because it's not credit. It's an asset that you can hold. It's large, liquid, desirable, fungible. So it's actually money. S&P really is the money that we hold as a savings tool now because we can't hold fiat currency as a savings tool. This is the S&P valued in USM2. Now, it's done pretty well since 2008-9, the crash. It's done pretty well, right? But it's not like a massive wealth generator, right? It's money, it's a savings tool, and it's going to help you save the currency debasement, all of that stuff. So it goes up around that, 8 to 10% a year, right? So not a huge wealth creator, but definitely a decent savings tool. This is the QQQ. If we go from 2008-9, where the crash happened, well, it's done really, really well. Why? The QQQ is an index that really indexes technology a lot more, which is just simply the best growth provider in the economy. And so if you're indexing the thing that provides most of the growth in the economy, then it's going to outperform, right? So the QQQ, again, is money because it's large, liquid, fungible, desirable. Pretty good. Unfortunately, 80%, 90% of the world don't have access to these stock indexes. They don't have like a way to actually buy them, right? So it's very expensive to buy them as well. But then we have BTC, which again is a type of money. It's large, liquid, worldwide, desirable, fungible, and it is really outperforming the growth in M2. So I'm not a Bitcoin evangelist. It's just the thing that is outperforming the best and giving the best returns as a money to save what's going on in the fiat currency space. So Bitcoin or other assets can work. Bitcoin just is the fastest horse in this race to kind of just take ourselves out of the fiat currency system because we can use it. Fiat currency system is credit. So use credit if it's available to you and you can do that. But when you're actually saving value, you have to get out. So it's either Bitcoin or S&P or QQQ. That's really the money for savings. And then if you want to make investments where you think you can outperform the hurdle rate of those investments, as we've seen, Bitcoin's going up 50 to 70% a year. So if you think you can make more than that in something else, then by all means invest in it. But Bitcoin is money. It's a savings tool, just like the S&P and other indexes. And so it's the best performing one. Therefore, I talk about that and not the other two. So as we've seen from the current cycle, we're not overheated. This is actually the perfect time to be active when prices are weak. this long-term investment style, when prices are weak, really creates big returns, growing the portfolio. And then if anything happens on the currency side with debasement or anything, Bitcoin's going to price that in as well, because it's an asset and it's a money, just like the other indexes, but it outperforms those. So that's where I am. And for right here, this is great. Good news for investors to have a bit of weakness around the halving. But towards the end of this year, it could get silly again. If you do trade, Bybit deposit bonus down in the description. The Crypto Investor course has 300 videos on crypto. If you want to get yourself set up, I'll link that down below as well. I'm James, this is Money's EG. Cheers for watching, and I'll see you in the next one.